It's going to be a bitter winter for Europe.
Britain is facing a crisis of confidence from the financial markets, which actually has been years in the making.
With Russia turning off the gas and OPEC cutting output, energy bills are soaring. Inflation is at an all-time high.
The country now faces prices more than 10% higher. 10%, think about that.
Rising prices are weighing heavily on low-income households.
There are some real harrowing challenges around customers having to choose between feeding families or paying bills.
The wealth gap is bigger than ever. Women and minority entrepreneurs are feeling the crunch as VC funding dries up. And the rise of far-right leaders in Europe is threatening regression of LGBTQ rights. Against this backdrop, how can we create equal opportunities across social classes, geographies, genders, and ethnicity? We convene business executives, thought leaders, policymakers, and artists to create a blueprint for growth that leaves no one behind. This is the Bloomberg Equality Summit.
Please welcome to the stage Shartia Brantley, Deputy New York Bureau Chief and Senior Editor, Bloomberg Live.
Thank you. Good evening. That's right. Good evening, everyone. I saw all of you all talking and networking. Don't go to sleep on me now. So good to see all of you. Welcome to the Bloomberg Equality Summit. Whether you are joining us here in the room or virtually, we are delighted you can join us. We have been producing the Bloomberg Equality Summit since 2018, and we are proud to host these important conversations on advancing equity and equality in the workplace and society at large. We've held this event in New York and Mumbai, and we are thrilled to bring it back to London before an in-person audience. It's been 3 years since we've been in London in this building. Our theme is equal opportunities, building a fair future. Economic inequality can stunt a country's growth and threaten democracies. The pandemic wiped out years of progress in tackling poverty, widening the gap between the haves and the have-nots, with record inflation exacerbating the problem. Tonight, our focus is on financial inclusion. Nearly 1.7 billion people around the world are not served by a bank or financial institution, according to the World Bank. Consumers' ability to access financial institutions via digital or brick and mortar are critical to wealth accumulation. What is the role of government, corporations, and nonprofits in closing the access gap? What are the long-term ramifications of inaction? What are some of the innovative technologies and solutions that are available today? We'll hear from the CEO of IDA, a charity based in Singapore, and their work helping migrant domestic workers achieve economic independence. Later, we'll hear from the CEO of Barclays UK and the CEO of Fair for All Finance and hear about innovative solutions to make financial services affordable and accessible. And we want to hear from you. We are delighted to have such an esteemed audience with us this evening. So during dessert, we encourage you to engage in discussion with your table mates. We'll get started in just a minute. I want to take a moment to acknowledge Principal Asset Management. And now, I'd like to hand it over to Asa Nouri, CEO and Regional Head of Distribution for Europe, Principal Asset Management. Asa.
Thank you. Thank you. Welcome, everyone. On behalf of Principal Financial Group, thank you for joining us this evening. We're going to kick off the Bloomberg Equality Summit here in London. As you heard, I'm Asa Nouri. I lead our European efforts for Principal's investment unit, which has been rebranded. We're very excited about it. It's called Principal Asset Management. So big applause for that. I'm absolutely delighted to be able to host you all here tonight with Bloomberg as we begin this week's discussion around financial inclusion and economic equality. As markets around the world continue to grapple with the impact of COVID-19, the potential of a global economic downturn and continued challenges with equitable access, we've assembled an impressive group here tonight to discuss how all of us, private industry, government, non-profit, and academia can help better enable financial security for all. This year, to help contribute to that discussion, Principal has launched the Global Financial Inclusion Index to measure the extent to which individuals and businesses have access to useful and affordable financial products as well as services that meet their needs, delivered in a responsible and sustainable way. We commissioned the Centre for Economic and Business Research to measure financial inclusion in 42 markets and score them all how well their governments, financial systems, and employers in that market help deliver accessible financial solutions and support for their own citizens. The index should help all of us to identify structural gaps in financial inclusion globally and ways to address them, thereby building more productive and protected workforce and a society overall. We hope that through this research we can find impactful collaboration opportunities to help drive positive change and bring others along to do the same. Tonight marks an important step to doing just that. We have put together an editorial program with Bloomberg featuring subject matter experts and hand-selected participants to tonight's conversation. This, we believe, will lead into what I hope to be a robust table conversations for you all tonight. We have hand-selected participants because all of you work every day of your life to help build economic equality. Thank you. I look forward to the insights, dialogue, and future collaboration that will come out of tonight's dinner here with you all. At Principal, we believe that the financial inclusion is foundational to financial security and global economic progress overall. And it's only by working together across public and private sectors that we can help more families, communities, and markets to be resilient, to be equitable, and of course, secure. Thank you for your participation, and I hope you're going to enjoy the dinner and the discussions they were all having with you. Thank you for being here.
Thanks so much, Asa. I'm excited to speak with Jacqueline Lowe, CEO of IDA, a program that has helped more than 5,000 migrant domestic workers and low-income Singaporean women achieve economic independence through financial education, communication skills building, and entrepreneurship. Before Jacqueline joins us virtually, let's hear from some of the participants.
I work here for 10 years, but then before I know IDA, I don't have saving at all.
I was not planned to start any businesses, but then joining IDA first year gave me a hope to start. Oh, why not, Nilu? You can do something.
IDA really helped me gain and boost my self-confidence. The moment I stand up and in front of people, I will be very scared and I feel very nervous. The first time I speak, I really shiver, but the few days, the next classes that I attended, slowly my self-confidence started to develop.
Before even me, I'm not vocal at all. But when I start IDA, you cannot stop me talking. No, really serious. Because of Aida, I know how to save, I know how to manage my money. I start already also my business.
Like we always do something to make each and every session fun and looking forward to it. What kind of lunches we're going to take, are we going to take potluck or are we going somewhere after the class, to have a lunch together.
So I was become their sister. Every time they have the problem, every time they have the homeworks, and they always confide with me what to do and how to do. So that makes me happy.
Thank you. All right. Well, welcome, Jackie. Good to see you. How are you doing?
I'm good, thanks. How are you?
Well. So good to see you this evening. Thanks so much for carving time out to speak with us tonight. You're speaking before a full house, by the way. Just want to get started. And if you can, Jackie, give us the current situation in Singapore. The women featured in the video just now are very inspiring. Can you tell us about the situation? Where are they from? And we'll go from there.
Sure. So migrant domestic workers in Singapore are mainly from Indonesia, the Philippines, and Myanmar. And basically, they're women typically from low-income communities in their home countries. And they leave their families to come work in Singapore to really create a better future for their families. And it's a tremendous sacrifice. And many of them are mothers with young children. And when they come to Singapore, typically a contract is 2 years long. And in that, and they only go home typically once every 2 years. And it's not an easy job. They work on average at least 6 days a week, and the average working hours are 13 hours a day. And for this hard work in a country as wealthy as Singapore, where in Singapore the GDP per capita is the equal of any developed country in the world, but these women earn the equivalent of $500 a month for beyond full-time work. Essentially. But it is a rational economic choice for them. They earn in Singapore 3 to 5 times what they otherwise would at home. So actually smart financial decisions at this point in their lives can actually really change the trajectory of their lives. But the sad reality is research has shown that actually only 6% have saved enough by the time they return home, and 60% only return with material goods and typically no savings at all. Mm-hmm. So IDA exists, of course, to change all this.
Definitely. And let's talk about numbers for a moment. There are about roughly 250,000 migrant domestic workers. So this is not a small population.
Yes, it's a very large population. They're really part of the fabric of life in Singapore. 1 in 5 households employs a domestic worker. And actually, domestic workers comprise 10% of Singapore's total labor force.
Mm-hmm. Thank you for that amazing overview. And can you elaborate a little bit about the training they receive? In my opening remarks, I mentioned it's access to financial education, literacy, communication skills. Can you talk about the modules that the participants go through?
Sure. IDA has a sort of very in-depth set of modules, and we also have a holistic approach to financial education. So essentially, we have 3 modules that lead people from basic savings and budgeting through to smart financial decision-making in the second module, and it ends with entrepreneurship. So to complete our second module, people create a personal financial plan, and to complete the third module, they create a business plan. Within the modules, we teach both money management skills as well as communication and confidence skills. And in module 1, we also include IT skills, because we really feel in this day and age, without access to the information available on the internet, you really can't be financially included. So we consider that a key building block.
Mm-hmm. Now, personal finance, budgeting, adhering to a budget, I have my challenges there, saving money, all of this we must shift our behavior. So when you talk about 6% of the participants returning home with a financial base, how difficult is it for them to adhere to budgets when they're so laser focused on providing for their family and sending money back home?
Yeah, it's really difficult. And actually what we try to do at IDA is really encourage them to think of the big picture. I mean, long term, they're here for their family, but they also have to make the decision to put aside money for long-term savings instead of always, remitting 80 to 90% of their income for household consumption. So one of the big lessons, and in Module 1, what we do is we ask them to set a savings goal every month. And actually part of the class is reporting back on that monthly savings goal. And it's interesting that actually many of them don't think of having a monthly goal. And they also don't kind of string things together, that actually if they have a longer term goal, what does that equate to in terms of the monthly decisions they need to make? So actually just that habit of having a goal, and every month they also report back on whether or not they achieve that goal. And a lot of times they get advice from their fellow classmates, advice and encouragement around those goals. Mm-hmm. So inculcating, I think, the ideal and the importance of setting aside at least something makes a big difference for them.
It really does. And since IDA's founded in 2006, more than 5,000 women have gone through this program. Can you talk a little bit more about the multiplier effect to this program?
Sure. So our research has shown a multiplier effect of 9x, actually. So for every student at IDA, 9 people are impacted. And that is based on the average number of dependents they have, the average number of businesses they start, and also the average number of employees of those businesses and their dependents. At IDA, we carefully track impact data. So we survey our students as they first sign up and as they complete each of our modules. And after Module 1, they are able to increase their average monthly savings by 40%. By the time they are alumni of our entrepreneurship course, that increases to close to 80%. And also we track the ownership of productive assets, and that doubles as they become alumni of the entrepreneurship course. And also business ownership increases from 6% to over 40%. By the time they are alumni. And these businesses are businesses they start in their home countries, often with family members.
Mm-hmm. Let's talk about obstacles and opportunities from COVID. Many organizations had to make the pivot during the pandemic. How did COVID impact your enrollment?
Oh, it had a dramatic effect, to say the least. So what we did when we were teaching all our classes in person, we had a 18-room campus on Sundays, which is the typical day off for domestic workers. And we had at any given time 500 students enrolled. And when COVID hit, all that ceased. And in fact, we are still not back at our main campus yet. So in 2020, over the course of 6 months, we adapted all our curriculum. We're able to offer almost all our courses online. The only one we had to wait until we had a physical facility to offer it was actually the computer class. But we were wonderfully surprised, pleasantly surprised about how well our students managed to adapt to learning over Zoom. And as well as our trainers. All our trainers are volunteers, and we spent some time training them to teach online, but it was really a smooth transition. So, the silver lining of COVID is I feel, we have a new way that we can reach students. And I think there's still a strong preference for in-person classes, because I think for our community in particular, making friends, having peer support is something that is really important to them. And that is much easier in person. But there are some people who find it difficult to come to our campus. So we foresee offering, both online and in-person options. And we're very hopeful that we will have a new campus in the coming months. But I guess, COVID forced us to learn things, as it forced many other organizations to do. But now, we have a new tool in our arsenal and a new way to reach people. And yes, we hope to continue online as there is demand. And I think we envision a hybrid model as well, where it'll be partly online and partly in person.
Mm-hmm. Got it. Let's talk a little bit about social media. During our prep call, you mentioned that there is a low awareness rate of IDA amongst the more than 250,000 migrant domestic workers. What do you attribute to that, and how is TikTok and Instagram playing a role in turning that around?
Yes, it's been a long challenge for IDA that we feel our, level of awareness amongst domestic workers is maybe 10% or less. And we've done a lot to try and change that. We have a lot of, pre-COVID, we had a lot of in-person events, and we had a pretty active Facebook page, but it doesn't seem to be enough. And, we recently did a sort of strategic exercise to figure out how we can reach more people. And we felt that we could take more advantage of indeed TikTok and Instagram. So we have embarked on we've invested significant resources in an online engagement initiative. So since May, we've created close to 40 TikTok videos, cross-posted them on Instagram, and thanks to that have about, on TikTok, close to 30,000 views, and Instagram is actually, I think, twice that. In addition, we have created an online financial education resource center that we started building in July, and we will gradually add more and more content. And both of these are part of an effort to increase awareness, but also provide a variety of on-ramps to the training resources that IDA can provide, because our long courses, which I spoke about in terms of the modules, those are 6 months long. That's a big commitment. We also have developed since 2019 a short course program that is free single session courses on important financial decisions and important life skills. So we hope that is one on-ramp. People can, for free, try out a class, get some understanding of the value of financial education. And similarly with our online engagement initiatives, we want to give bite-sized learning, and hopefully people can kind of cycle through an ecosystem of support that IDA is trying to provide. And really we are, I think we feel confident we have a good model. I mean, I hope you can sort of see it in how our students speak about what they learned from IDA. And, we see it reflected in our impact data. And we really just want to spread the word. We also have a real partnership approach, and we're trying to be a resource for all other NGOs working with migrant domestic workers. And we also work in partnership with the Ministry of Manpower. So we're trying all avenues to bring our resources to as many people as possible.
Mm-hmm. Well, final question. We're speaking before an esteemed audience, a group of business leaders, decision makers in the room tonight. What is your call to action for them when it comes to financial inclusion?
I think there are many roads to financial inclusion, many different types of interventions that we can make. And I think you'll be talking, I'm sure, about various ecosystem changes and what sorts of new products and services can be developed. And I think these are very important. And in fact, one of the things that IDA would love to assist with this. And one of the things in Singapore that we would, is one of our goals to work on in the year ahead, hopefully, is possibly the development of a new financial product in collaboration with others, of course, around some sort of long-term savings product that bears a decent amount of interest, a kind of savings product or life insurance product. So, we're very interested in that, and these things are very important and can make a big difference. But I guess my call to action is, yes, please keep working on those. But also don't forget the capability building that is needed, because even if you have wonderful tools and resources available, people need to have kind of the skills and confidence to access those as well. So I would say, look around your communities and see what organizations are also providing capability building support, which I think is also critically needed. So that's one call to action. Don't forget the capability building part. And the other call to action actually is kind of a request from IDA. I mean, we're trying to be a learning organization, and we would love to learn from good examples around the world. So if you think you are, if you observe something that would be of interest to IDA, please get in touch and let us know. We would love to see what great practice there is elsewhere that we could adopt and bring to our community as well.
All right. Well, Jacqueline Lowe, thank you so much, CEO of IDA. Let's give her a huge round of applause.
Thank you very, very much. Thanks for the opportunity to share.
Appreciate you so much, Jackie. Everyone, please enjoy your next course. We'll resume the programming shortly.
Please welcome to the stage Matt Hammerstein, CEO, Barclays UK, Sasha Romanovich, CEO, Fair for All Finance, and Bloomberg's Danny Berger.
Everyone. A fantastic panel for you on financial inclusion. We have with me Matt Hammerstein, CEO of Barclays UK, and Sasha Romanovich, CEO of Fair Finance for All. And look, this is a very timely conversation we're about to have. Of course, these problems have existed for some time, but there's the fear that it gets exacerbated. What the winter looks like, energy bills are high, interest rates are rising, housing becomes less affordable, the cost of living crisis affecting those most vulnerable. So an expert panel here to address it. And Sasha, I want to start with you, perhaps because you're next to me so I can pick on you. Let's start with this idea of financial inclusion. What is it and what is the state of it?
So we define financial inclusion as people, from whatever background, from whatever walk of life, that they're able to have access to fair and affordable financial products and services, so that they can actually weather life's ups and downs, but also build their long-term resilience. And ultimately, so that they've actually got that sort of headspace to be able to really participate fully in society and take advantage of the opportunities that are presented to them. And you might say, well, where are we in terms of the UK? So as of today, our latest research, there are 17.5 million adults in the UK in financially vulnerable circumstances. Yes, 17.5 million. 14 million people have less than £100 in savings. So a washing machine breaks down, or you want to get a washing machine. That's a life event. It's not something that's within your realm of possibility. And the real challenge is that actually for people then being able to access the things that, for you, if you didn't have your savings, what would you do if your washing machine broke down? You might borrow, a small amount of money. You could probably get it at a reasonable interest rate and you'd pay it down and life would be fine. Whereas if you're someone who hasn't, has got a poor credit record, a thin credit file, has had a history of maybe not making some payments, you cannot access that. And so when we talk about small amounts of unsecured credit, we're talking about amounts typically about under £500. But the difference that can make to somebody's life is phenomenal.
Right. And Matt, if you could just add to this in terms of where we are now, how dire do you see as the problem with the folks that you interact with, that Barclays UK interacts with? And additionally, push this forward. What do you foresee the problems to look like in November, in December, when the weather turns cold and the cost of living crisis continues?
Yeah, well, I think the situation is going to make everybody make very difficult decisions about how they're going to weather through the inflationary environment, whatever their financial circumstances prior to this were. But as Sasha said, there is a particular part of the economy which is going to suffer very significantly and acutely. And they're going to have not lifestyle choices, but life choices to make in terms of how they weather through the winter and potentially some of the resilience challenges that she's just referred to. So there's very definite things that I think all of us need to do to make sure that people have the financial resilience and safety net around them. I don't think we can all just wait for the government to make those decisions.
Okay, well, armed with the knowledge of the unfortunate truth, Sasha, what is, or is there a game changer? Step one, this is the thing that needs to happen.
It would be lovely if there was a silver bullet, wouldn't it? I don't think that there is just one thing that this is the thing that would make the difference. However, I think that what we know is that if you're looking at somebody building a safety net, that you want to enable people to start to build savings. You want to enable people to weather life shocks. You want to, and weathering life shocks, if you think about it, if you haven't got friends and family, and if you've not got your savings, then actually you want to access small amounts of affordable credit, you want to have affordable insurance. At the moment, there's quite a poverty premium that exists. So if you are poor, if you have a poor credit record, where you actually go to for credit is actually high-cost providers or a really burgeoning, organised crime moves in where there's a market gap. There's a growing amount of organised crime getting into illegal money lending in the UK, and that is tying into other crime in terms of people then how you actually repay if you can't pay financially. And we're at a lovely dinner, so I won't go into it, but you will watch the telly. You can do the maths.
Is this something that governments need to step in terms of regulation, or is this just about having access to credit and that solves the problem?
I think it's going to be. At the moment, there are too many market disincentives, and Matt will be able to talk to that in terms of the market alone fixing this issue, right? So I think it's one that's going to need a collaboration between government, between regulators, between financial services. There are economies around the world that do this, right? So, where they align what they want the market to do in terms of, how much capital of banks needs to be allocated to certain areas, serving low-income people, looking at how regulation is tailored not only to protect people from harm, but also to enable a market to function.
Right.
There are lots of things at the moment that actually would make it really hard for you to step into providing unsecured credit to low-income people. We need to make sure that the environment changes so it makes a logical, rational business decision for you to do that, because community finance providers, credit unions, they are part of the solution, but they on their own are not going to fill the $3 billion gap in provision for people in this situation.
Yeah, I mean, what would it look like? Sasha makes a great point. The economic incentives aren't there to provide credit for the financially vulnerable. What would need to change to make it so that that is feasible?
So I think there's two things. I think one, as Sasha alluded to, I think you've got a triangulation between confidence tools and ultimately support. So I don't think any one of those is on its own going to solve it. So on the confidence side, we do a lot through a program we call Life Skills. We've done it for 9 years now, impacted nearly 13 million people across the UK on really basic financial education skills. We don't do that for any other reason than we see all those customers every day and our different interactions with them, and we know that they don't have the confidence to manage that. Even if they have a bank account, they don't have the confidence to use it in the right way to build the financial resilience as Sasha rightly described. To the tools is everything from very simple budgeting and other tools, and as much as we think that is self-evident to most people, they don't necessarily understand how an APR on a credit card or a loan works. They don't understand how to manage their own budget necessarily as disciplined as other people might in other walks of life. And then finally, the products, I think, are a part of the tool and the support to be able to slot into that. But if people don't have the self-confidence, the awareness, and the tools to be able to use them in the right way, even having the product isn't necessarily going to help them. I think the model problem that Sasha describes is more a bridge, because we do have those community development finance organizations in the UK. If they can help, if you will, create the confidence, give them the early stage interventions, how do you then build a bridge between that and the more mainstream financial community so that they can then become back a part of it?
What is the bridge then?
So the bridge, I think, is a combination of interventions on products. So as Sasha described, we have all the products available to us, but how do you construct them in a way my shareholders don't necessarily want to spend time, or want me spending a lot of time subsidizing, if you will, borrowers in a way that necessarily contravenes my obligation to them. But how do you do that in a safe way? So we have a credit card that we call Barclay Card Forward, that has a low and grow strategy on a credit limit. That's an example. but how do we create referral models between those community development financial institutions so that we're not necessarily waiting to find those people, we can get them prepared so that when they interact with us, they're ready and can use the product as confidently as they can.
Yeah. And what do you find in terms of once folks understand the tools, once they're educated, are they able to help? Are they able to access these tools? Is that sort of enough to get the education?
It's interesting. I mean, I can give you a case study in terms of the difference, the interaction between products and tools and support, right? So we're piloting at the moment something called a no interest loan scheme. So it's this idea that some of you may be familiar with the Good Shepherd scheme in Australia, which was this idea that some people might be able to afford to repay the capital on a loan, but not the interest. What difference could that make? And I'll use the case study of a lady called Lisa. Her brother had committed suicide and her parents had passed away, and she was faced with not being able to provide a funeral for him, which meant the family wouldn't be able to go to his funeral. He'd have a pauper's funeral. And she had a poor credit record, she's on low income, and she qualified for one of our first no interest loans, and she was able to give her brother his funeral. She was actually really good at managing her money. A lot of people who are poor are really good at managing their money. They know the cost of everything. But what she actually got was, in doing this no interest loan, what the credit union did was said, right, when you pay us back £1 a week more. That went into a savings account. So by the time she'd paid back the loan, she also had built up some savings. She was then at the stage where, because she'd proved she could pay back, she could then borrow some money to get some equipment that she needed in terms of the house, which was labour saving stuff, which means that she has now been able to actually start looking for a job when previously it was inconceivable. So this idea of these things as stepping stones, and I think the education works best when, and Matt, with all due respect, I think understanding an APR isn't, what people need to know is like, what is the cost of this to me? I don't know how many people in the room could actually calculate an APR. I did chemistry at Oxford, I can't. But I think actually being able to explain things in simple terms that people understand, and to actually help them build healthy habits at the right time, which is what AIDA were doing, right? They were helping people build healthy habits, but giving them some stepping stones that made that possible, conceivable for them in their lives. And that's the really important thing.
And Matt, how hard is that to get a team to build a program like this? I mean, it's one thing to say that this is a good thing. How difficult is that to put into practice and execute?
Well, I think it ultimately just takes focus, like anything in life, and a commitment behind it. Part of the challenge, I think, though, is then understanding the characteristics of the people that you're working with. So we spend a lot of time with what we describe as vulnerable customers. So Sasha rightly describes that significant number of people with low financial resilience. There are also 24 million people in the UK described as having a vulnerable characteristic at any given point in time. And those characteristics could be anything from a mental health issue, a bereavement, things that make them, even if in, if you will, normal circumstances, they feel competent to manage their finances, there's something that's causing them to not be able to do that as well as they can. And I think a big part of what an organization like us can do is, again, we see so many millions of customers every day, is how do we spot those vulnerabilities and how do we tailor what we do and the support that we provide to people to recognize them, so that, again, as they build those healthy habits, you're bearing them in mind in terms of how to shape those habits and what shape they would take. So we've trained 12,000 people in the past year how to spot 34 different vulnerability characteristics. That's not a simple thing to do, because my team, they're not counselors, but they're getting to a point where they have to have a little bit of that mentality so that when they're spending time with an individual, they've got to look for the subtle cues that suggest this individual needs different treatment and different support than the average customer that we see.
Yeah, I think there's a really interesting thing. I was bringing this brilliant challenge in terms of what can everyone in the room do. One of the things that I say is 50% of people in financially vulnerable circumstances are in employment. Yeah. And it may be due to their family circumstances, it may be people who are cleaners in the building, different people who will actually have challenges that you may not be aware of, may not see. One of the things that actually lets people like illegal moneylenders thrive is shame. The biggest word associated in terms of when people get into financial difficulties is deep shame. And we've managed to start the destigmatization journey on mental health, but talking about financial health and worries is really challenging. I've even seen that with my son who's at university, right? You know, he's actually doing okay, but he's with some friends who are substantially much better off. And he spent much more than he should have done in September because he was trying to keep up with his mates. And so some of those things of actually everyone in the room just normalizing, checking in with people, whether actually, can you afford this? Is this okay? Because, you know, when I talk about people in financially vulnerable circumstances, you may have formed a picture in your mind of someone who's in crisis, a situation. But, you know, 3 million people are people who've got into problem debt who are earning 30,000 or more a year, right? And so I think being able to normalize talking about our financial matters, talking about, can you afford this, is okay, not making the assumptions, because that's how people can find they get into situations where they spiral. There are 8 million people in problem debt in the UK. During COVID, 11 million people built up £25 billion worth of personal debt as they were trying to deal with some of the consequences, because while some people could save, there were an awful lot of people who eroded the buffers they had and had to go into borrowings. So I think that's my first thing, is everyone can normalise that, but also make people aware that, as Matt said, there are community finance organisations whose awareness levels, for anyone in the room a marketeer? No? Excellent. Right, Jane, awareness levels of credit unions and community finance organisations is 2%. It's like through the floor. And so getting people aware that there are places they can go to then helps us start to build these bridges in terms of referral mechanisms. Because actually, those community finance organisations, they are currently delivering 300 million of that 3 billion gap. That's a hell of a gap to fill. But if we can scale them, then they might become investable for you to be able to look at your shareholders and say, yeah, actually, this is a sensible investment for me to make. And that's the journey we've got to go through.
I kind of want to get your take on Sasha's first point, because you're at this obvious, very fascinating intersection of offering these services to folks who are financially vulnerable, but also an employer, someone who manages employees. How do you look at that? Do you have programs for your employees? What does that sort of balance look like?
Yeah, of course. So we have all the support that we provide externally. We first make sure that we practice at home first and make sure that all of our colleagues first are paid well. So there's the living wage that we provide. And then two, that the tools and capabilities available to them are as strong as they are to any of the external communities in which we provide them. The big thing, I think, for us, though, is where those problems show up. And I think Sasha just alluded to this, but, you know, we find a lot of the challenges that she just described in terms of that shame, people aren't going to tell their employer about this issue. Right. So it isn't as though we can hold forums with colleagues around the room to say who's got a financial, challenge. They're not going to just clear it in that way. So part of it is educating line leaders as to how they, again, spot signs of vulnerabilities in their own team. So that the thing that manifests itself as a performance weakness in the job might actually have an underlying economic or family issue around it. And again, that's a huge management challenge in terms of building the skill and capability to do that I think every organization can learn. And then two, again, where does the problem show up? We're spending a lot of time, for instance, with the NHS, because a lot of financial health issues end up as physical health issues. We have a partnership with Family Action and food banks, particularly to try to build scale in that, and then also with the Trussell Trust, a partnership where we're educating the people in the food banks that they run to spot financial challenges that are endemic in the individual that they're serving through the food banks, that again, you can catch the underlying issue to correct the surface issue, which is not being able to provide food for their family. And they're very excited about the fact that they can not only teach their colleagues financial skills so that they can then impart that into the people that would use the food banks, but also digital skills. And I think there's a whole other underlying future-oriented challenge here, which is around the economy's going digital. And a lot of the people that we're describing here don't have the basic digital confidence or digital access to be able to participate in that modern economy. And that's just going to make the problem and some of the divides that we're looking at even more challenging.
When we're talking about this idea of tailoring the product, tailoring the help to people, one thing that COVID certainly did was exacerbate those who need to provide childcare, those who take care of the elderly, which overwhelmingly falls on the hands of women. How does that make a difference in terms of offering these products?
I think, again, it goes into really, I think you bring up such a good point because it's stepping into the lived realities of people's lives. So, one of the next no interest loans was to a lady who was a single mother, wanted to go back to work, but needed to secure a nursery place for her child. To secure the nursery place, she had to pay a month's fees up front before she'd got into the job. She was able to have a no-interest loan that then enabled her to secure the nursery place, which means that she's then got into employment. And so I think it's another one that we funded through one of our providers, Fair for You, in partnership with Iceland, right? It received some press. It was a £50 food top-up card. And there was a bit of a well, is that buy now, pay later for food? No, what it enabled people to do is at £50, you qualify for free delivery for your groceries, and you can buy in bulk. So you now think you're a single parent with children. Now something that became a massive labour has become a possibility for you. So I think that's the really important thing, is that one of the things where things fail is that the financial system is largely designed around people with predictable lives and predictable incomes. And things that work brilliantly for people whose lives are like that are hazards for other people. A direct debit, if you're not getting an irregular income, isn't something that's easy where you can save money. It's something that can tip you into an unauthorised overdraft and give you real problems. There are so many of these different things in terms of design that if you step into someone's reality, you can actually design much better products for it. And we've for anyone who's involved in financial product design, we've just done a massive piece of research on customer segmentation to analyse it by customer behaviour, financial behaviours, but also to look at what that means in terms of their lives and how you can then design products that really work for them. And so if anyone wants to get involved with that, we would love to spend time with you.
Sasha, I love all these call to actions. Excellent. Matt, I'll give you a moment to do some call to actions, but I first do want to ask you the same question in terms of sort of product for the person, especially, again, as there are certain groups of people who have been more impacted by financial inequality than others.
Yeah, without doubt. And again, I don't think it's about product per se, but it's about how you help people use the product in a different way. And some of the modifications, as Sasha described, around making the product more flexible so that they can see the fact that it has the feasibility of suiting their needs. And again, I think for big banks in particular, it's taking what look like standardized, simple products and breaking them down and creating the modularity that allows people to piece it together in a way that suits their circumstances, part one. And part two, I think, bringing that to life. So again, through segmentation, so that we better understand not just whether or not someone's vulnerable or not, but also the way they want to use the product. And that we tailor, again, communications and the interactions that we have with them, whether that's through the digital app or the person that they're speaking to on the phone or even in a physical premise that is ours or someone else's. And getting that level of complexity into our system so that we can create the flexibility to support people better is I think the obligation that I feel, and I think anybody in a large organization needs to start to take a hold of.
What has been the take-up of these sorts of things? Because Sasha, you were talking about this idea that, the word needs to get out there. People need to learn about it. So what has that journey looked like for Barclays?
Yeah, as I said, for us, I don't purposely or personally spend a lot of time looking at volume, because I think it's about system design, and the volume will come once the system design works well. But I think we've definitely, as Sasha's alluded to, have anecdotes where we know where we get it right in a local community with the right team, with the right design of a product and the support around it, it definitely takes off. So what we're focusing on is how do you replicate that across communities across the UK and getting the volume of communities being supported in the right way rather than the volume of customers per se.
Yeah, well, we only have a few minutes left. I do want to wrap it with some more tangible, this is what needs to be done. Sasha, you've given us so many, but I don't know if you have any more in your arsenal, especially, if you want to give Matt advice about what Barclays UK needs to do, these financial service providers, what do you still see missing?
I think it's it's interesting. If you look at the high-cost credit market in the UK that was very successful and also caused quite a lot of harms, what it was really good at was removing friction in the customer journey and making it easy for people to do stuff. And so I think looking at, what can we learn from that and build into customer journeys? And I know you're already doing some stuff on it, but at the moment, we're working with an organisation called Lightning Reach, to integrate grants finder for people. So there are a lot of foundations that are like, you're a journalist, you're a journalist who's now on hard times. Here is a foundation that actually has a hardship fund for you. There are actually hundreds of them, but it's impossible to navigate. If you've not got a lot of money, that is really hard in your headspace to trawl through and see if there are any. It's an obvious one where you can actually use AI and to actually really sort of, say, well, actually, you could qualify for this, try this one. So that's number one. There is £16 billion worth of benefits that are left unclaimed. Oftentimes that's actually older people because they feel ashamed of actually needing state support, and yet it is support the state has decided should be available to them. So building benefits calculators into journeys. And then also really then looking at what else can we build in terms of flexibility. And I think, Matt, that was the key word, was flexibility. Is at the moment, a lot of the system penalises people for the fact that, for example, they are going to miss payments. We know that people in financially vulnerable circumstances are going to miss payments. So why on earth do we have a credit reference system that penalises them for the fact that they miss payments? That is going to be normal. And interestingly at the moment, if you're a financial service provider that designs a product that is flexible and lets people flex their payments, they still get a black mark on their credit record because the credit records and stuff are designed around predictable lives, predictable incomes. If you miss a payment, you're bad, you're penalised. So I think there is some really interesting stuff that we can challenge at that very systemic level and say, design stuff for the reality of people's lives. Because gig working, people with unpredictable lives, unpredictable incomes, it's going to get bigger. And it's a big opportunity for organisations to take up, I think.
Matt?
I think the three big things I would say is the problem's all around you. So you don't have to go somewhere to find it. It's in your organization, it's in your team, it's potentially even in your family and your community. So the more you pay attention, the more you'll spot it, and the better you can get involved with specific individuals, again, in your community, in your team, in your organization. Two is, exactly as Sasha said, I used APR as an example, but it's about how do you take the complexity of financial services and make it more accessible by taking the jargon out of it. And I think we've all got a role to play in that, particularly I think in this room and the orientation that we'll all have around the challenge that's here. So how do you demystify it and make it feel like it's more accessible just by the way in which we talk about it and help people understand how it can be useful to them. And then three, ultimately, is get involved in some sort of, I think, opportunity to try to create scale solutions. Because I think the problem is complex. There is no silver bullet, but we've all got to work hard, I think, to find those opportunities where we can scale it across hundreds of thousands and millions of people to make as big an intervention as we can. And that's why we're involved in it, because I think we have the opportunity, working with an organization like Sasha's, to spot opportunities for things that work in a particular community and then replicate it across many different communities. And I think we've all got a role to filter out the best ideas and then make sure that they're getting access to the right capital support and capability.
Okay, well, I'm afraid we're going to have to leave it there, but what a great note to end on. Thank you both. Please join me in thanking both Sasha and Matt. Thank you. And I know in the crowd and at the tables we have a very well-informed, a very active audience here as well. So please take this opportunity for a bit of active networking and to continue the conversation. Thank you.
Thanks. Sorry, I know I went on too much.
please welcome back to the stage Bloomberg's Shartia Brantley.
All right. I am so hopeful after hearing from our speakers this evening. Change happens when every one of us leverages our power and our platforms to increase financial inclusion. Thank you all for being with us this evening. Thanks to our speakers for such an insightful discussion. We appreciate you. And there's more to come, and we hope that you will join us tomorrow as the summit continues. We have an exciting lineup of speakers, including Fidelity International CEO Ann Richards, John Lewis Partnership Chairman Sharon White, Man Group CEO Luke Ellis, and many, many more. And we'll be right back here tomorrow in this room starting at 9 a.m. I'd like to thank our sponsor, Principal Asset Management. We'll see you tomorrow. Thank you so much. Good night. Thank you.